That's a pledge, Bill. So how are you going to keep it?
Well, we are the platform for end-to-end digital transformation. Customers today have two things on their mind. On one hand, they have to automate and improve their productivity and do a lot more with less. So they're really trying to take cost out of the business. On the other hand, they recognize that digital business is something they have to do well at. So they are investing, and they're investing for the long term. So if you're investing for growth or you're taking cost out of the equation with ServiceNow, you can do it on one platform. You can do everything on ServiceNow's platform, and that's what makes it so compelling.
Bill, all told, your stock rose 3%. Were investors cheering the pledge to not do layoffs, or were they cheering the financial results?
Oh, I think they're cheering the financial results. You know, we are growing at the rule of 58.5, meaning if you combine our revenue growth and our free cash flow margin, we are growing at 58.5. They say you're a world-class status at 40%. So we are doing something that no other enterprise software company in the world is doing. We're growing faster than all the others, but we're doing it in a profitable way, and Wall Street likes that. But more importantly, it's a reflection of what we're doing for great customers like the Schwarz Group in Germany. They're going for next generation retail, or the United States Army. They're serving their 1 million constituents, and they're doing this end to end on one platform to run all of their business operations.
Yeah. You, of course, actually added net people to your business in 2022, quite a lot of them. Would you make the most of some of the talent that's becoming available and hire more in this environment?
Yeah, Caroline, we hired 5,000 last year, as you know, and it's fantastic because on the ServiceNow platform, you can literally run all your business operations as a company or an individual on one platform. So this argument that young people or new hires are unproductive is not the case here at ServiceNow, because they do all their work on the ServiceNow platform, which is a total sensation. So our productivity is fantastic with early in career folks or senior executives that just want to work for the best company in the business. We'll continue to hire. We're especially hiring in engineering and go-to-market professionals to take care of our customers.
Analysts out there saying, well, now you're saying you're hiring, but they're saying you're executing well in a tough environment. You're a man who understands activist investors. You dealt with them in previous times. You understand how to sort of navigate that. Talk to us, as other businesses face this environment right now, how are you looking to talk to your investor base, particularly when you have a stock that's at still pretty high multiples?
Yeah, Caroline, you're right. I mean, it is high multiples, but that's because the growth rate is so high. What I'm super proud of is that understanding, and this was also reinforced today by other media professionals, that the activist investors that are working with these other technology companies start the meeting off with, we need you to look at the benchmark, and the benchmark is ServiceNow. And then they say their growth rate is 28%, and then they look at their margin profile, and it's the highest in the cloud business, and then they show them our free cash flow margin, and they're like, we need you to be that. And that's how the meeting starts. So I take that with a hungry and humble attitude. We're humble because we know it's all about taking care of the customers and doing it super well with great employees. And we're hungry because we want to grow even more and even faster. Right. So I don't have an issue with activist investors, and I have worked with them in the past. I actually have a great relationship with Elliott Management and with Jesse Cohn. I think they're terrific. And at the time when I was with another company, they offered very good suggestions, and we built trust, and we did a lot of cool stuff together. But here, I don't think this is the first place they'll stop because it's so successful.
Hey, Bill, does your company thrive in difficult times? Because I think you were talking about customers moving away from different individual vendors and basically coming to you for a one-stop shop solution. But when customers do that, it's often because they're having to look and make changes reactionary. Do you see what I mean?
Yes, I do, Ed. I mean, here's the situation. if you believe the independent research companies like IDC, they will tell you that IT spend for software will grow in double digits this year. So that's a fact, an independent research fact. But let's assume that didn't happen. And let's just assume there was no increase in IT spend. What's happening now with customers, when they have 3 or 4 technologies that do something similar, they're saying, let's cancel 3 and go with the one that's the best alternative. We don't want all 4. And during the hype cycle of the whole pandemic, where people were trying to figure things out, they just bought every point solution they can get their hands on. And now they want to really go for platforms that matter. So what ServiceNow is enabling companies to do is really consolidate the spend, move away from platforms that don't matter, and increase your productivity quite dramatically on one that does. So take cost out, go for ServiceNow. Put growth in, go for ServiceNow, all on one platform for end-to-end digital transformation.
It's interesting. You are such a positive person, it sounds like, and in many ways rightly so. I'm looking at analyst recommendations. Basically, 36 of analysts say buy your stock. There's only one holdout, one underperformer who thinks your stock's going to drop, and that is Stefan over at BNP Paribas. What one thing would you say to Stefan? What's he getting wrong, or what is there one thing that does keep you up at night that you're trying to tackle that reconvinces that sell?
Well, I got to go speak with him. I think he has to have a meeting with me or come talk to our people or see our technology. We probably haven't spent enough time with him. But I guess 1 out of 36 isn't too bad. I would just tell him, like, if you look at where the new economy is going, this is a platform economy. And in this economy, you have the hyperscaler clouds, which are all very relevant, outstanding companies, and they're going to do very well. And then you have a couple of SaaS companies, and among those couple of SaaS companies that matter, we are one of them. What's unique about us is whether you're doing workloads in a public cloud, a private cloud, or in a multi-cloud formation, ServiceNow serves as the control tower for end-to-end digital transformation. If anyone understands the implications of that, and the network effect that that creates, and the fact that we have the stickiest, most loyal customers in the business with retention rates near 100%, and we grow same account revenue growth nearly 30% per customer, plus we're getting lots of new business. We had a new business surge in Q4. I find it hard to understand why anyone wouldn't have a buy rating on that stock. The other thing from an individual investor perspective, hey, look, the whole thing, Caroline, as you know, the tightening monetary policy is what compressed the multiples, especially in high tech. But as that now gets more normalized, you want to be in the companies that have the ability to give you tremendous leverage, because once that tightening of the monetary policy loosens, gets more normalized, everybody in 24 hours or 48 hours is going to jump on the bandwagon to get in high leverage growth stocks like ServiceNow. And you want to be there before that 24 or 48 hour rush, or you're going to miss out.